Hello, Jens. We
Hello, Theo.
yeah, now we can hear you. How are you doing?
Yeah, I'm fine. How are you?
I'm very good, thank you.
Yeah,
Thank you
you
so
were on
much.
vacation, no?
You have the way to reveal things to what's
Ah,
up on the surface.
well, it's obvious. I mean, I just look at this colored face, this bright smile.
It means he just came from vacation, this guy. Jens, just allow me to say before um, I go away to let our audience know that on Thursday it's going to be the fifth episode of Market Talk series. I will be interviewing here at Admiral Studio Mr. John Bollinger. I believe we are all familiar with what is Bollinger Band indicator. It's the man himself who created the indicator, and I believe that whoever is going to join this webinar, and I'm sure they're going to be hundreds of people, they're going to join that webinar, is to make sure that they're going to get the insight of what Bollinger Bands are best used for in the market. So I just share the link with everyone. Guys, please make sure register and book your seat for that day. Okay, Jens, once you are ready, you can share your screen.
Okay, 1 second. Where is it?
Sure.
Where is it? Where is it? Ah, there we have it. Okay, so trade the
Okay.
news.
Oh, good.
So, and the chat is available for yes. So let me just say hello, traders. Hello, traders. So this is now where you can ask all your questions, and we have to hurry up a little. So today is our trading day. In fact, let's see whether there's something interesting to trade for us. So we had earnings before the market opened. It's KMX, it's CarMax. Surprised on the upside, quite solid. In fact, have some difficulties right now due to high interest rates. So this is also a topic for a company which is in the used car sector, let's say. And definitely worth our attention. The current environment, gapping up something like 6-7% or so. Already elevated volume. Elevated means that we have a pre-market volume which exceeds 10% of the average daily trading volume. So in fact, KMX is not that actively traded. So 1.9 million on average for the last 3 months. That means if we have more than 200,000 shares being traded in the pre-market, the stock already exceeds this 10% threshold. It does already. So we have 269,000. I have it here on my screen. So obviously the stock is hot, is in play for the day, and then we have potential for interesting plays. The problem, put this in quotation marks, is we have equity indices right now under pressure. So European markets see selling pressure. The DAX, you probably have seen that, below 15,800, new weekly lows. And by the way, let me just check. Well, let's see how things play out for the Nasdaq and for the S&P 500. I don't really like marketplace in the current environment due to the fact that the VIX yesterday dropped below or two new yearly lows. But yesterday we saw a surprising reaction against the so-called fat lows in the Qs. You probably have seen that. It was around 361, 360, 361, around this. And then we saw quite strong bounce from there. I was surprised, to be honest, because given the overall rhetoric which was used from the Fed, but also from Fed Chairman Powell in front of the US Congress at his semi-annual testimony, I have to admit that I thought that we are probably good for a break lower. Now we bounced. Let's see if we get to see the break today. The problem is, if we are talking about KMX, it's not a market stock, but still, it's a stock where I say, well, I'd like to get the support from the overall market here. So if we are favoring the long side in KMX and the short side in the overall market, well, not really sure if this is playing out that nicely. But we get into too much details right here. So this is something we will focus on in a few seconds. First of all, I'd like to say we are here for educational purposes only. Very important. So we are looking at a live account in a few seconds. So it's my money, and we are looking at a real account. And if I make a trade, it's real money. It's my risk I'm taking. I'm sharing my thoughts, my game plan with you. What I'm looking for. Why do I look at the stocks I'm looking at? How do I filter them, and so on and so forth. If we formulate a trading setup, please be aware that we are trading leverage products, so-called CFDs here, contracts for difference, and they are not suitable for all investors due to the circumstance that they are leverage products. So before you start trading, please, first of all, make sure that you understand all risks involved, that you have a risk profile being created for you from an independent financial advisor, or do something on your own in terms of creating a risk profile. Download a demo at abnormarkets.com. Check the trading with these products for yourself, if it suits your risk profile, your risk appetite. And if you then feel fine trading these products, you can also feel free to open a live account. All details on the website abnormarkets.com. In addition to that, check out the contact details, reach out to the client support for further questions you might have when it comes to opening an account, trading in general. But again, coming back to the risk disclaimer here, everything I present to you today is for educational purposes only. So it's not a financial trading advice or financial advice in general, whatever. Don't misinterpret this. It's purely educational content I'm providing for you. I don't need to introduce Abnormals any further. I think check out the website, abnormarkets.com. It's a broker in the business for over 20 years. I mean, having someone like Mr. Bollinger here talking about his invention in a live event speaks for itself. So you're not doing this, well, I can also say it's not that I'm of the same level as Mr. Bollinger is, but still, you're not working with everyone, let's say, and so working with everyone is not just a lot of fun, but it's also because of a well-established broker, fully regulated. All details can be found on the website. For further details, check also out again the possibility to reach out to the client support, customer support. So one word, one broker, but now we are heading into the charts, and we want to make sure that we are well prepared for today's trading session. So I'd like to guide you through my layout here. So this is individualized for my purposes and what I like to look at. So first of all, you can see here the symbols I'm looking at. This is very, very. Let me probably also change this here. Let me just get the cues here. So there we go. And then probably taking out Unity. Unity was interesting, I think last week. I'm not really sure, but I think there was a push. There was a push on the upside above the, well, let's call them Apple highs. So there was this Vision Pro announcement at the WWDC, I think. And so Unity was part of this announcement. Probably that's a good way to put it, because Unity. Oh, this is funny. What I just did here. Let me just see what I can do. Okay, that's not so good. Whatever. So so Unity, what was interesting last week for a breakout higher, the push up to 42, but let's focus on KMX, not getting distracted by other stuff. So first of all, I'm not getting distracted. The symbols I'm planning to trade, I make sure, well, in case of Tesla, I always have a look at Tesla and at the developments there, because it's a very interesting trading stock. Same is true also for AMD, even though I haven't it here on my radar for today, at least. And then I make sure that I have all symbols I'm willing to trade here, and I'm not getting distracted by anything else. I also want to have a look at the overall market. So this is why I have the spider and the Qs here. So this is the ETFs on the S&P 500 and the tech index, the Nasdaq 100. And so you can see I have KMX here. And how come that I say KMX is of interest? So first of all, let's probably head over here to my my weekly preparation, let's say. So there's a great website, or not website too, but also great Twitter feed I highly recommend following. It's Earnings Whispers. Right now I think it's each Friday. Some months ago probably, they were releasing here their overview every Saturday, but then they found out that they were just copied from every other follower here, and they were releasing their overview, and they just decided to publish their earnings calendar for the next week already on Friday, which is great, because then I can already retweet it and have an overview already over the weekend, and make sure that I spot some potential plays for the next week, go through the charts and see whether this might be of interest for me. So and I can see here. So first of all, Carmex at the end of the week, Friday, this is what's potentially in play, even though I say potentially, because I don't know whether market participants will say, hey, this is a great stock, let's have a look at this and trade this. But I want to make sure that I'm not the only one thinking, or that there's only a few people interested in trading the stock. And then we come here to the so-called pre-market screener. It's offered for free at marketwatch.com. Let me just make it PMKT for pre-market screener. And it is a first great tool here to use. And then what I do is I update it. So you have to do it yourself, updating it yourself. And you can see, obviously, so what are the most active stocks being traded right now? You can see it's obviously KMX, it's Carmex. Why? Well, most likely due to the earnings being released. And there's probably also 3M, even though I have no idea why that is the case. I also think it's not such a volatile stock, especially if there's no fundamental trigger. And also, I can go a little lower here. It's not just the leaders I'm looking at, but also the laggards. There's also, for example, a Skills or a Space, Virgin Galactic, for example, with over 3 million shares being traded. You probably have seen there was some announcement, I think a week ago or so, that they are now going for space tourism and advertising this and starting it at the end of June, if I'm not mistaken, or the end of July, I'm not really sure. And so there was a pop of 20% gap up, and then we rolled over. There was another wave of selling the next day, or over the last days, in fact, and now they're again massively under pressure due to what is this? I'm sorry. What's the word for this? Let me just check out the stock here. What do I have here? Virgin Galactic always needs more money. What's the word for this? I forgot it. I'm sorry. What do you have it here? Stock falls on space tourism raising. It's raised. That was the word I was looking for. So they're raising 400 million, meaning that they're giving out more shares. So it's no secondary offering or something like that, and the stock is selling out based on that. Let's see whether we can close the gap. Probably this is a sign of strength to some extent, even though we don't want to look at this stock because it's just too light. It's not heavy enough. Let's say, at least not for me. And so you can see here, you can go over the stocks then and see which are the most active traded stocks, even though looking here, for example, at an Amazon or a Tesla, I mean, they are already actively traded. 2.9 million shares being traded in a Tesla, even though we have to say, when looking here at Finwist, which is another great portal I recommend following, because you have a great overview of the stock fundamentals there. So it's finwist.com. You type in Tesla, for example, over here, and then you see, okay, there you have the average volume for the last 3 months, and you can see on average each day 136 million shares were traded. So now this is a lot. And if you now have a look here and see, okay, and now 3 million shares are traded, well, it's okay. Like, it's active, but it's not that it's a super hot or something. But our threshold is 10%. And this is then when you come to the conclusion, okay, obviously KMX is probably worth a look. We know it has a fundamental catalyst. Let's see how many shares are traded each day on average for the last 3 months. You go to KMX, and then you see, okay, great, 1.93 million. The threshold for 10% pre-market volume of the average daily trading volume is 200,000. Well, you see it yourself, 270,000. So this stock is potentially in play. This is of interest for us. And that's how I, first of all, spot potential plays. And then I go to the next step. I open the chart here in the MetaTrader, and I have a look at where do we stand? What do we have here? And as you can see, so first of all, we are in a quite strong uptrend, let's say. So it was kind of a consolidation over the last, probably, let's say, 2 months, from April till June. We broke out, and as you can see here in the daily chart, so you can see this is the hourly chart. We can also go down to a 30-minute chart. Some technical traders might probably say the 30-minute is even better than the hourly chart due to the trading day starting at 3:30 German time, so or 9:30 Eastern time. Even though I think it's good for our view we have here on the chart. So obviously an uptrend, consolidation, 2 months, breaking out, and now coming into a potential zone of resistance on the upside, as you can see here. So this is around 81. And so now we have the earnings. And as you can see here already, as you can see, 83. So obviously in the pre-market, we are right now trading above this potential breakout level. This is giving us some very interesting information because we have some solid earnings. By the way, I'm sorry. So it's obviously hot. So we still do not know what are the earnings. I know it already since I opened it here. You can see it on Yahoo Finance, which is great, by the way. You don't need to Google that yourself. You go on Finwiz, you scroll down, and as you can see here, June 23rd, and there you have all headlines on the stock ticker, the ticker symbol yourself, and you can see, you can just click here on. I wouldn't recommend Barron's, by the way, because it's not for free, if I'm not mistaken. But you have, for example, Reuters. So like you click on that, you have an overview in Yahoo Finance, and there you have all details on the earnings release written down. So they say vehicle affordability remains a challenge due to high interest rates, lower consumer confidence, so recession fears, inflation, higher rates. That's what we heard around the Fed already. But cost cuts, so they already took steps to increase their overall profitability, even though they find themselves in a challenging environment. So they can beat here on the quarterly profit. Shares of company jump. That was something we know already. Industry has been struggling to offload cars that were purchased at high prices, forcing companies such as CarMax, but also Carvana, that was also a play. And the stock really ran higher massively due to the very elevated short float in the stock itself. And Carvana, you can imagine Carvana to be kind of, let's say, an Amazon for used cars, probably. That's a rough way to say, but very simple. I think this is a fair way to put it. So a very interesting stock to trade. But still, we see a beat in earnings, and also obviously market participants are reacting positively to what the company has said. So you can see it here. Net revenue came in 7.69 billion. Estimates were 7.53, so 6.16 billion above expectation in terms of revenue. Here also very interesting, and that was a massive beat, which is, in my personal view, I think it's a very, very, very strong sign. You get an earnings per share adjusted profit of 1.16 against an expectation of 0.79, which is a beat of something like 50% of the expectation. So cost cuts are obviously working, and cost cuts are not affecting their overall business in general. So revenue still stable, even above expectation. So if you cut people, so if you fire them, well, obviously you have less working force, right? So less people working means you're probably seeing an overall negative impact on your overall business and revenue. But in this case, obviously this is not the case. So solid numbers, strong uptrend, gapping above were 2 new yearly highs, and letting us come to the conclusion that probably the stock is interesting from a long perspective, and probably good for a run up to, I don't know, probably to this line here. This is where we are trading right now. So it's something where, let's say 83 around. So these lows from around 1 year ago. Let me just probably highlight this here. Okay, so and okay, so this is our line in the sand, 83. If we can hold above that, well, probably we have some room to run on the upside. 87 probably, in 88, probably 89 levels we haven't seen since September last year. So bringing all this together leaves us with a bullish bias for the stock. So then I have a sheet here. You probably call this it's my sheet which I use for preparation purposes. And as you can see here, so it's the ticker symbol KMX. I also have it highlighted here in green because that shows I have a bullish bias for today. To remind myself, that sounds ridiculous, but sometimes you get caught in thinking about, well, probably short is interesting. Also, the price action has to confirm that, but I want to remind myself that I'm long for the stock. I shouldn't need to remind myself, and most of the time I don't need to, but it's kind of a like I just do it. I just do it to also probably have some color here within my sheet. I have then a support resistance area where I say, okay, these are the levels of support and resistance. How do I get there? Why do I say that? Because, well, you might be surprised when looking here at the chart. I'm sorry, here. When you're looking at the chart, well, obviously, this is just the spot market. So this is just Wall Street open. And well, obviously, we are trading something like 6-7% higher right now. So where do these levels come from? Do I use them based on here? Well, certainly, this is the breakout area around 81 and probably also 82 to some extent. But what I like to do is I like to look in the pre-market, and therefore you need an external software like TradingView, for example. And also here, I recommend, I think you need to upgrade your account, and then it's not for free anymore. But I'm not really sure how this works. You check this out yourself on tradingview.com. But there's a chance or there's a possibility to highlight the pre-market and also the after hours. So after hours here in blue, and orange is the pre-market. And there you can see it here. So on the right you have the price column, and if you here go to this settings thing at the bottom, it is German, so it says Sitzung. It's like a trading session. Okay, if you click on this, you can see there you have regular trading hours. If I click on that, well, it disappears. Now you can see here, orange line. So this is where we're trading right now in the pre-market, but there's no trading taking place right now. So it's the same chart as you can see here in the MT5. But if you go there and click on prolongated trading hours, then you can see what's happening right now in the pre-market. And this is what you have to click. I think you can also get this for free, even though you don't have real volume then being traded here. So this is a NYSE stock, for example. So what's trading here in the pre-market? And then you can also see some lines. I take this one out. So first of all, you have an orange line here. So this one. What is this? This is the volume weighted average price. So this is the price which is paid on average based on the volume being done from market participants to give you an idea on whether are buyers or sellers in control. If we trade above, buyers in control. If we're trading below, sellers are in control. And now you can also see here, it's falling together. It has to do with the fact that it's based on volume, and the main volume came in with the earnings release. So that was this candle, obviously. So you have an E here also on the downside. So this is the so-called anchored VWAP on the earnings release. So I want to know what market participants paid on average for the stock after the earnings were released, to have a line in the sand and also argue the same way, saying buyers in control if we're trading above, sellers on control if we trade below. This is now a line in the sand for the opening because you can see here we are dropping now in the pre-market. Not really sure why this is, but certainly it has also something to do, in my personal view or opinion, with the overall market, which is continuously dropping. So we can see here DAX minus 1.5%. It's not a tech stock, but Qs are minus 1.2, 1.3%. The overall market S&P nearly minus 0.9%. So probably it has something to do, holding up nicely, but still under pressure to some extent. I want to see now given that I have a bullish bias based on the numbers, I want to see that we are making it back and hold above this purple line, long thing short. If we don't make it back above that level, the stock is not of interest for me to trade. So that means let's see what the opening brings us. And interesting enough, look at this, it's 83. So 83 is close here to this level. We formed in the first half of last year, and where we were trading 1 year ago, 83. So we want to have the stock holding above that level. If so, we continue potentially. We have to some extent confirmation that we are probably headed higher. In addition to what we're getting to see here right now, after an initial pop on the upside. So first of all, this is what we want to see whether we can hold above 83. I also favor, to be honest, here a push probably above 85. That depends on how the market comes in now. And then let's just see if we can hold that. I'm not really willing. I'm more kind of, let's say, momentum trader, and especially around the opening, but I also need a so-called momentum stock for that. So like an AMD, for example, or a Tesla or an NVIDIA. And if you have something like a KMX, it's not a high beta stock, let's say. So and that's something to keep an eye on, which means I adapt my personal trading to the stock I'm trading. So that means I probably wait for the opening phase to go through, see where we settle with a fair price, and then whether we see a push or hold above a certain level, something like that, hold above the inflection point, for example, so that we can then say, okay, well, now I'm interested for a long play. So this is something I write down then here in my game plan. By the way, let me just I'm fill in the details here on let me just fill in the details on where we're standing right now. So I have everything open here. So 6.58%. We see something like 484. Okay. So that's so pre-market volume showing me that this is very important for my trading journal. And my documentation if I make a trade, so that I have this so that I have everything at hand and capable of making sure that I really can spot the place where I perform my best here based on such input details. And so yeah, that's it. I mean, we were talking about the game plan. You can see here. So usually I'm getting very, very specific, very detailed. That's for example from yesterday. I haven't changed the plan for the Qs because I want to fully concentrate right here at KMX. Let's probably if we're not getting anything to see, no trade or something, then we can also see what the Qs deliver. Let's see which levels are of interest. I can already say it's 360, 361. Around this is the fat lows. If we drop that and hold below, then probably we are getting to see a deeper corrective move into the weekly close. But first of all, let's have a look here at KMAX, and I'm roughly saying, okay, guys, I want to see opening drive holding above. In this case, coming back to the chart here, I want to see holding above. It's 30 now, so market opens. I want to see now a push above 85. Probably hold above 83, so like the earnings VWAP, let's say. If we hold above, see an opening drive higher, and then a tight consolidation. So like, let me just probably a second. Let me just very roughly now. You might be surprised. So now the market is opening, and I'm talking to you like nothing is happening. I know what I want to see, and then I already said it. Let the market settle. Let's wait a little. Show me what you got, and then, well, let's see whether this is of interest for us to trade some how. But right now, I'm just waiting. And also, in addition to that, given that we don't really know, or we don't know, we can see it, but the liquidity providers right now are not offering liquidity when it comes to Atmos. So the first 5 minutes of trading here, in this case, you can't trade because the liquidity providers don't really know whether they can hedge their exposure, and though they cut this period out, and only after 5 minutes they allow you to trade. But let's go here. So what I could imagine to happen, what we probably get to see is kind of an opening drive, so like something like that, and then a consolidation, and then I'm probably willing to take some kind of drive higher for a momentum play. And I want to see such a scenario. So just visualizing this, I want to see this above the volume weighted average price. So like this is going higher. So that's the price which is on average paid from market participants, the price which is paid based on the volume. And if we hold above this orange line and then getting tight, then I'm willing to take a long trade. Probably just give you an example from yesterday, probably. Let me just see. Do we have something like a Tesla? We got a very strong bullish drive. Yeah, something like that. So something like that. Just imagine, so we are not talking in detail now what is currently driving Tesla and that stuff, but we see the opening drive. You can see here, this is taking place within the first 15 to 20 minutes. And then you have this consolidation taking place here above this orange line. And this is exactly what I just draw out here. So this is like seeing an opening drive, holding, accepting a higher price, market participants saying, hey, this is good news. It's a good quarterly report. And then based on that, we see a drive higher. And then you're playing the momentum here for this move, this strong run higher. In this case, it's a 2-minute chart. And then you're probably managing this, for example, with an EMA 9 on a M2 or M1 in this case. So I don't know where you enter a trade. If you enter a trade somewhere around, I don't know, 56, 57 or something, risking against the lows of this consolidation and then taking out the trade once we break this, in this case now, yellow line. So this is like 260.7 or something like that. And this is exactly what I want to see now in KMX. So that's what we are waiting for and what we want to see. So bullish opening drive, holding above volume weighted average price, and then taking it from there. So in fact, probably it's even better to look at it from a minute chart. So here, there you can see it. So you see opening drive, push higher, great. You see the pull in, but we can see we're holding above the volume weighted average price. We are holding above the price, which is on average paid from market participants, which is a strong sign. But as of now, it's not worth anything because we're in the first 5 minutes of trading. Let's see if this is sustainable and if buyers start to step in. One thing we have to take into account, I'm already here seeing, is look at the spread, which is quite wide, to be honest. So 25 cents. I mean, wide. It's relative, but compared to an AMD or something like that, you have 1-2 cent spread. So this is not that liquid, let's say. Something to keep an eye on and keep in mind when it comes to managing your risk, in fact. And so any questions? Any questions? So I'm talking through my thoughts. So now we are open here too. So you can also take trades now here, as you can see. But I'm not willing to take any trades right now. So it's too early. It's just too early into the day. Our thesis seems to be correct, let's say. So as you can see here, so we have some bullishness. We hold, which is good. Let's see whether we can probably hold above 86. The problem is the higher we push right now, the more difficult it gets because we are in an overall, let's say, mixed environment. Probably that's a good way to put it. And it's not just a mixed environment, but also risk reward wise, I think probably 88 to 89 on the upside. With a little wider stop, you probably get trouble when it comes to the risk reward. But certainly, as you can see here, buyers stepping in. So you can see initial drive higher, we pull in, it's a deep red candle from 87 down to 84.50, so it's 2.5 USD we're selling off. But look at the volume which comes in here. So this, I think this is noteworthy. It's far smaller than what we're currently seeing, and now we're heading back to the volume weighted average price, and buyers step in. So it's really like, it seems as if there's some aggressive selling buying taking place against the volume weighted average price. So I'm not really I'm not really confident in taking a trade, probably with a very small position. But if we can break and hold above 86, probably we have a trade, and we are risking against something like 85.50. The problem is, I'm not really sure whether this is an attractive risk reward trade, to be honest, because if you're going long against 86, so somewhere around here, entering with a break, you want to see a quick push and hold above 86, and you're risking probably against VWAP something like 150. If you say, I think we are probably not making it above 88 to 89 because we've come already a bit strong in, let's say. So it's not sad that we can't trend here, and probably even a push above 90, but the overall market is not confirming such a bullish thesis, I think. So you have some headwinds, let's say. This is a good sign now. So we are breaching 86, and we are holding strong, let's say. So let's see if bid stop up here and hold above 86. So as of now, that's one reason to be very skeptical, especially if you're scalping this. So what you want to see, if I say 86, I think that's a fair way to put it. You want to see breaking above, we are triggered, hold above. We're not holding above. You really want to see a quick step up of the bids. If you don't get to see that, we are already here at the trigger right now, probably taking off the whole position. If it's just a momentum play, I'm taking here in this spot. And this is right. This is what I'm talking about when I say, well, it's not the most attractive trading stock, let's say. And this is exactly what you don't want to see. So this is one reason, potential reason to sell the whole position, probably even if you're risking here against these lows, because the feedback you're getting is not the feedback you want to see. So the feedback is break 86, hold 86, move on, and no intraday highs. Taking off some, probably 50% of the position is probably solid here in this regard. And probably taking it back on if we now push above 86. But you should be on the trigger here, and be really careful. Again, solid. I mean, we're not selling off. We're not dropping back below a volume weighted average price or something. But on the other hand, we're not breaking and holding above 86. So that's something to take risk off the table, and probably add it back on once we get to see what we want to see, the break and push with momentum above 86. So, well, the thing is, now we could closely watch the price action again. So 86 seems to be a level. You see the break higher. You have a reason to be long, add back on. So 86 was attacked, not breached. Let's see whether we get to see that. Let's probably have a look here at the Qs and have a look at how the tech sector is coming in. Probably give an idea on where we stand here. Probably you remember that last week we had the Fed, and there was a low which was marked around 360, and this low here region around 360, 361 could be hold yesterday, even though the comments from Fed Chairman Powell were, well, I wouldn't say very hawkish, but they're also not very well, we expect us to cut rates, let's say. And this is also something you could have seen once you look at the dot plot last week. We made this a topic in last week's Trading Spotlight webinar here. So it was like, it wasn't really dovish. It was, well, it was really hawkish, to be honest, at least my personal view. And still, we're holding these Fed lows. So now we saw a squeeze higher, and now we are coming in very extended on the upside. What do I mean with very extended? Very extended means that based on a Keltner channel, for example, we are seeing that we are very, very far from the mean, let's say. And so a pull-in seems likely. We get to see this pull-in, but still we haven't yet broken below the Fed lows. So this is, in fact, the blue line here in the hourly chart on the upper left. This is my personal line in the sand. If we drop this level and hold below, I think we are probably headed for a deeper corrective move, which is like, well, probably pushing us down to this trend line, probably. The way, well, which means like below 350, probably down to the 340s or something in the weeks ahead. But therefore, we need to break this level. So as long as we haven't broken that level, I have no reason to be short the Qs. So probably you had a reason to play for momentum break lower on Tuesday, Wednesday, somewhere like that already, but you haven't seen the break lower, so you're out of the position. So you right now you have no real reason to be short. Even though I have to say you don't have a reason to be long either, because, and there's another thing I'd like to point out here. This is dead now. No reason. So 86. So now you're out of the position if you took the trade, 86. We still have 86 in mind for a break higher if the offer lifts there. So if we see a pop higher or something like that, well, it could be a runner up to 88, 89 for a quick momentum drive. So we have a line in the sand for the, let's say, minutes to come. Probably let's wait 4 p.m. probably, like the next 20 minutes, 30 minutes. As long as we can hold VWAP and if we break 86, well then, and if we can hold 86, bit step up, this is getting interesting. But coming back to the Qs and some thoughts here, I don't want to be long either. Why do I say that? Well, look at this purple line here. What is this purple line? Well, this is the volume weighted average price I have anchored on the Fed last week on Wednesday. And once we broke below that level, that was Friday here. That was last week Friday. We broke below and we held below. That was on Tuesday. That was a very interesting sign. So there were signs on the wall that probably on Wednesday there's further weakness to be expected. When we held 361, that was, well, first sign to probably take some off if you traded against this anchored VWAP here. But now what I think is, after we saw the strong reaction yesterday, and this very strong push, we haven't yet taken out this anchor volume weighted average price here on the Fed, which says, well, right now, buyers are not in control anymore after the Fed. We saw a sharp squeeze higher. So I want to take this, let's say 366 in the Qs, and say this is around the closing price from yesterday. So we can also work with that then. But I think the anchored volume weighted average price is an objective way to measure this level. Let's say we break above and we hold above 366, then I'm willing to take longs again in the Qs. As long as we hold below, I'm not long, but I'm not short either due to us holding, at least for now, the Fed lows from last week. So this is probably a good way well, to let this event here come to an end. So if we drop in the upcoming minutes, let's say 30 minutes from now, we are 50 minutes in a trading day. If we drop below yesterday's lows, which can be found around 361, and we're coming into this area right here, I can see that 361.30. If we drop and hold below 361, we are probably good for a push lower into the weekly close, probably, which extends itself on the downside over the course of next week into the quarterly close. That's certainly something to keep an eye on. You can see here selling pressure persists, and that's very interesting. What's also interesting is that KMX just dropped 85 and now rebits into such a flush lower, which shows it's not a market stock here. So this is something to keep an eye on too. And in case of KMX, I would say, again, 86 is the level to watch. So if we take out 86 on the upside, then we're probably headed for a run up to holding solidly. So it's I wouldn't call it very strong, but I wouldn't call it weak either, to be honest. So this is, well, probably good to go for a push higher if we can hold now the Fed lows again, see a bounce from there, which doesn't mean that we're long here. As long as we hold below the volume weighted average price in the Qs for today, I don't want to be long intraday too. In fact, I don't want to be long below 366. If we see a bounce from here, probably this is the quick pop up above or up to and above 86 in KMX, and yeah, I hope you enjoyed the session. So no trades today. Again, we can talk about trades if we drop the Fed lows and the Qs. We can talk about a long if we break above 86 in KMX. But as long as we are holding below 86 and as long as we hold above 361, you can see we are reacting against that level. There's no reason to be long or short. But keep an eye, watch this level, especially in the Qs now, 361 and also 86 in KMX. That could be potential plays, short plays. I'd say no short plays and short-term plays. That's a better way to put it. So I'm willing to trade the momentum. KMX on the upside, 86, bounce 88, 89, dropping below 361. Probably 357 here in the Qs on the downside. And so yeah, that's it from my end. I hope you enjoyed the event. Let's coming back here to the presentation and the contact details from Admirals. So if you have further questions, please feel free to reach out to Admirals directly, admiralmarkets.com. Also contact the client support. If you have any questions, if you're watching this now on YouTube, have questions, please feel free to comment in the comment section below. Leave a thumb up here if you liked what you just saw. Subscribe to the YouTube channel. Set a reminder so that you don't miss any of the videos which we're producing here for you. And happy trading. Watch your stops. Have a nice weekend. Enjoy yourself. Talk to you soon. See you. Bye-bye.